Okay, sorry. So how is the price traveling? You can see that the price has chosen a path. This from this low, hit this level over here, come back down to the middle level, and you are anticipating that it can potentially hit that level, right? And that level, you are looking for the intersection between the way the price is traveling and where all your zones are. Okay. So we've seen one like that. The next one that you can pay attention to is what is actually happening over here, right? And what is happening over here is giving you some sort of, you will realize that this particular chart has given us some sort of triangle over here. I don't know if you can see it. It gives us this particular triangle. Taking it off a little bit and use a different color. Right. So inside there is a massive correction, consolidations that can be happening. These are the charts that you want to avoid because price can eat here, deep down into here. You won't quickly see the kind of reaction that you want until either when we break out of this particular triangle. And the moment we break out of this particular triangle, what we're going to be having is we have this particular resistance over here. We have another resistance over here. And then all this area are becoming a big zone. What you actually want to see is how are we going to finalize this movement that's coming from here? Is it going to come like this and it's here and want to try to break down, first of all, before it continues to go up higher? Your ultimate goal is what actually happens over here. After the whole area has been cleared, then you can see that huge sell-off. And I'll explain what that means. That means every buyers have come in completely. And that's what you want to see. When there's no more buyers in the market, what then tends to happen? All right. But in all these little places, you can see that we can have a bounce off here. Price can see go up. We can have a bounce off here. So you want to take out all the buyers in the market so that you can send the price into a free fall. When it is no more interested, so either the retail traders or the longer term traders, and that area is after we've hit a particular level. We can hit this daily level and have a small sell-off. We can hit this weekly level and have a small sell-off, but you will be able to see clearly where is all the buyers going to find a reason not to be in this market anymore. All the buyers would have bought at the by the time price is coming to this high. So this is just a guidance. This particular channel is a guidance. And that particular channel might be that channel that give us that trade, that give us that huge significant sell-off. So what you want to do with this chart is instead of me to take a trade from here and then ending up over here, or take this particular trade and possibly finding a reason to end up over here, why don't I have a little bit of a patience and follow the way the price is traveling? So each and every time that price adjusts itself from this channel that is taking, you follow it and adjust it as well. So you know that this is a chart that you want to keep. It's approaching maturity, but it hasn't matured. So already you're giving yourself a reason to stay out of a very, very bad trade by anticipating too early before the actual events happen, because we are still on the third wave of buying that can lead us to that fourth wave that will become the sell-off. So the ultimate is to actually see what will happen after all the buyers have come in, right? You see the buyer's market, but when it's the buyer's market, you don't have much of a room until you actually wait. You will see it when it happens, but you want to ask yourself, as all the buyers, have they all have they all fulfilled their orders? Are they all in the market to a point whereby there's no more buyers in the market? Easily you can see either we have a renewed buyer effort when price hits this high, or we see a significant sell-off. And I will be anticipating a significant sell-off in a way, reason being we've been traveling from the first wave, and this is what I call the wave of success. This is the first wave, right? We can even choose this particular eye. That's wave one. We can say our wave two is going to be from this eye to this level. That would have been wave two. But what you now want to consider is this would have invalidated the wave two because we traded below the low, or probably can we say it's about around the same low. Let's see. Okay, so this would have been wave two, and then you can then say you have this from this to this. Oh, 1 second, I saw something just now. So you can then say you have a particular wave three over here. Sorry, that made a new high. It can look a little bit complicated, but it's not as complicated. And then the wave four comes in to make another new high before this sell-off. And then this begins another counting as well. 0 to 1, back there, another 1 to 2, back there. And then this now has gone into the smaller time frame. But if we look at it on a much more higher time frame, which is the daily time frame, the wave counts will be completely different. And that is why I wanted to look at it on the higher time frame so that we can get the daily. Each and every time frame have their own wave count, because you have to understand that the market moves in a cycle. So if I'm looking at it on the daily time frame, I'll be seeing this one as a first wave, and it's reached some kind of possible completion over there. The second one, and reach a possible conclusion over there. And then the third one, and it's likely going to reach a possible conclusion over here at this when it makes a new high, right? And the high of the fourth wave now can be that sell-off that we are looking for, which is going to be a particular move from this low back to that high, give us this support again, right? And then give us a wave four in that area. I don't know if that is a little bit clear. So you count your wave on higher time frame, you count it on lower time frame at the same time as well. Then you'll be able to know what part of the higher time frame wave is the lower time frame falling into. So the way you count it, you count the daily one, you count the 4-hour one, and then you'll be able to see whether the 4-hour is exhausted or whether the daily is the one that is exhausted. So over here now we see on the third one for the daily. Meanwhile, the 4-hour one might have reached a particular exhaustion. Let's see. So this is the beginning of the 4-hour one, 0 to 1, 1 to 2. So the 4-hour is just doing the second wave, which can push itself a little bit higher, or once it makes a new high above the previous high, that would have rendered it a completion, and then a sell-off will come in again, and then give us the third one, a sell-off will come in again and give us the fourth one. But you have to know whether that is in the impulsive phase or in the correction phase. So basically this one now, this is an impulse correction continuation. You know that this the impulsive phase and another correction, and we are looking for continuation, and that would have completed the third wave, 0 to 1. This is then 1 to 2. The second wave want to find a new high, which is going to be the high above here, which is where we are going. That high can be that high on the daily, right? And then that sell-off will come in again till we get to a place where all the buyers are filled in their position and there's no more buyers in this market, and it will be above there, right? That will be the best trade. You will have a very low risk reward. As soon as the price hits here with one massive impulsive movement, you know there's a weekly zone around here, right? So you're asking the difference between levels and zone. So we know there's a level, daily level, weekly level, and then all this area together with the way the price is moving, those are the zone where you are looking for reaction. So at the back of this zone, which is going to be price hitting this level, price hitting the weekly level, price coming back to continue to follow the channel with which it ascended to that level, right? When once price hits this level of high on that particular channel, breaking a new B and find a reason to start coming in with huge sell-off, that is your opportunity. All the buyers are now out of the market, and then that sell-off can be very, very fierce. I hope that really answer your question, Damien. And that's about 162 pips trade opportunity that you will be able to take with a bit of a patient if price gets there. All right. So that is that for me on Aussie card. Let's look at my favorite pair now. I want to look at Pound New Zealand. I believe the Pound New Zealand can give us a huge opportunity going forward. We'll All right, so on the pound New Zealand, this is what I'm looking at. I want to look at the monthly chart quickly. Welcome. There are a bit of intricacies, but once you understand it little by little, it will make sense. Okay, so looking at this monthly charts, the good thing about monthly charts is they kind of keep you into perspective. Okay, good question. Who asked that question? Right. The reason why it's my favorite pair is I'm looking at this from a monthly perspective. Okay. What is this candle? And what is that candle? And if you know how to read candlestick, where are we coming from? So if the trend is down, which is clear, right, on that monthly chart, and then you start to see what type of candles are these. You start to see indecisive candle at the back of a downtrend, right? That is how do I call it? Forex 101. The trend is down. Now you start to see this. Okay. This is alerting you to what? A potential reversal. And when you're gonna get a reversal on a monthly chart, then that reversal can be hugely explosive, right? So this is not a daily, this is not a 4-hour chart, it's not a 30-minute chart. Look at that. Rejection, doji, doji. Look at this move. 1,100 and something big. All right. So, and it occurs in an area of a previous resistance. So, and this area of previous resistance becomes a zone because price blew above it, but you can't see it very close below it. So we have an area of potential what support over here. We've tested this support the first time on monthly, tested the second time on monthly, tested the third time, triple reaching, the third time on monthly, and then now first doji, second doji. Does it look like as if this gentleman really want to go down, right? Is this gonna now become the golden opportunity for us to at least say that, how do I time this in? And I'll tell you more about this PS. I've been studying it for 466 pip. I started buying it at 187. I started buying it at 187. I made about 500 pips in it, and then there's still more to go on this particular pair, at least 600 to maximum another 1,000 pip. All right. So having a look at that on monthly and see that, okay, doji, doji, and indecisive candle. And then now we want to resume. Where are we coming from support? All these are just Forex 101. And then what I want you to pay attention to is, let's look at it, let's look at it from a very huge perspective. So we have this huge impulsive move down, and then we have a bit of a correction that change around, and then from this impulsive move that cannot sustain itself to start going up. All right, so can we look at this and say that most probably this is a very huge correction? 1 second. So at the back of this impulsive move, we have a huge correction, and then obviously that correction supposed to give us a continuation, and that continuation is now failing currently. We've seen 2 months of it failing currently, right? So even as for the mere fact that you have an impulsive move down and you see a correction and you're anticipating continuation, you have to be able to anticipate that that continuation can become a failure at the same time as well. It's life. Sometimes you want to go in one direction and something happen and that direction change. All right. But the blessing about this correction that's supposed to become a continuation is we've tested one key level, this level, first time, second time, third time, fourth time. So we kind of satisfy with this support over here, right? And this is a trading strategy in its own, whereby by the time the price is testing a support 2 times, well, you can call it a double bottom, or even a triple bottom. A triple bottom becomes a what? Becomes a very solid bottom that leads to reversal. But look at this. We have this low, we have this higher low, we have another higher low. Okay. So this is a failure to go down lower, a failure to go down lower. And then we now have the third or fourth failure to go down lower. This has finalized the story, whether you like it or not. For me personally, I want to be a buyer of the pound against the New Zealand going forward. The next key thing for me is the New Zealand itself going to become weakened? So I'll look into that in this class as well. If the New Zealand is going to become weakened, and then obviously the pound continue to resume its very strong uptrend, then this guy see have a very big potential to going forward. All right. So having said that, we've let's look at what our monthly levels are. So that monthly level will become that particular level over there, and then it would have given us either this area of low over there for the monthly support. Okay, so those are areas whereby I don't want to miss the trading opportunity that will unfold if price gets there. So now go back to weekly. So the weekly is now telling me that um, we have this particular low right here. And then I'll change that to my magenta, which is my weekly color. And then obviously we have a very significant level of resistance that is coming in that area. Okay. So from here to here is about 1,300 pips, which is not a bad trade if someone can be patient and catch that. All right. So that is the levels that we're going to be working with for now. And obviously, I haven't decided a weekly zone or weekly level. It's now high time to look for what the daily is saying. So as you can see over here, you're narrowing things down and then you bring in your daily into perspective. What is the last daily high? There's a daily zone high over there. Okay, and that is acting as resistance. Another one potentially you can say is right over there, but don't complicate it too much because the more you complicate it, the more difficult it will be for you to see things. But you can say to yourself that let's draw this particular trend line for you to bring your daily into perspective. So are we in a buying environment or are we still in a selling environment? So this particular trend line on the daily gives us one particular perspective. From that high all the way back to this low, the trend is down. We try to break this high and then we form the market failure. The market failure is a very huge, significant tool for a trader where the market continues to go to that particular direction in which it was going before. So clearly, you know that something has changed. We've got this low, we've got the market failure to go down lower, which is a market failure. And then now you are now anticipating a different market condition. So if I said to you that what is the major trend now on this daily chart? The major trend before was down, but now that downtrend has been changed because we've broken above that particular trend line. It wasn't convincing enough, but we formed a market failure low, right? So the market condition is not actually trending down anymore. We are now in a consolidated phase, all right? And in a consolidated phase, a couple of things can happen. We can continue to be testing that support. What do you want to do in a consolidation? You just want to be buying the support and selling the resistance. What is our recent resistance? Is over here, right? In this daily. And that's the reason why. So I've got 10 minutes to go. I believe I should be able to round this up within 10 minutes. If you think you have any questions, don't hesitate to ask. If you want us to do another 45 minutes, I can still squeeze time and do another 45 minutes for you. But um, going forward, this is now in a consolidation, all right? As I've said, and this consolidation, we are in a resistance area. You can't fight the resistance area. You cannot anticipate more than what we are seeing over here because already you know that we are not trending down anymore. The market condition has changed to a consolidation. The consolidation, all it's trying to do is to balance itself up to look for that explosive move. All right. So the downtrend has cancelled. The uptrend wants to resume, but it's playing about in a way. So what do we do in this area? So we know that the downtrend has cancelled itself. So all we want to do is to find a way to be following the uptrend. So we can cancel this and start looking for best area to buy. So this low, one of the best area to buy, that low, one of the best area to buy. And then just because we want to be a buyer and we know we want to be a buyer from what we've seen on that monthly chart, right? This low, another best area to buy. The price has given us this low as a best area to buy. We can then be seeing us having what I can call some kind of you can see this consolidation pattern that we are in a consolidation pattern, and this consolidation pattern can either break to the upside or break to the downside at the same time as well. But that monthly chart has given us a perspective. So what we are anticipating is what low price can price attain for us to see a break of this. And you will be very careful trading closer to here because you don't actually know which one will break. All right. And this is the reason why multi-strategy will be able to open your eyes to a couple of other things. So having said this, a lot of traders can only wait for this break, okay, which will be um, a break of this and potential retest, all right, and then continuation. That can be one of the very best things to do in this situation. But how are you preparing for that is another key thing. Do you want to see a break of this and hope for a retest and continuation? It will be good. Or is there a possibility that a break of this just continue higher, right? So that's another key thing that you want to consider, that what am I actually seeing and um how do I manage this? So the one key thing that you can start to say to yourself is, let me now go to a 4 hour time frame. On the 4 hour time frame, I will see much better. What should I consider when confirming a swing trade? These are what you're going to consider when confirming a swing trade. All those levels that I've measured, I've given you where to see them. That weekly, that's your swing level, right? All these daily are your swing level. But what you now want to be considered is when you look at this swing down, what is this? This swing down, right? Gives us 668 pips. The um, sellers, are they still in the market? This swing down gives us about 564 pips. The sellers, are they still in the market? That level, that areas of highs on the daily and the weekly and the monthly, these are your swing level. This one is now pushing it down 356 pips. Are those sellers still enough? Over here, 600 and something pips, huge sell off. 500 and something pips, huge sell off. Now we are doing 350 something pips. You can start to make that decision yourself and see that, okay, those sellers are losing steam, isn't it? It is clear. You can measure it, right? So those sellers are losing steam. What you want them to do is you want them to sell the last one and fall into your hand, and you want to time it. Okay. So so this move that we are seeing over here on my 4 hour chart, you're welcome. On my 4 hour chart, I want to you'll be seeing them losing steam, and when they're losing steam, so this is one bias that price is following this channel now, right? Doesn't mean that this channel cannot be broken. When it breaks, then you want to start looking for what are my support levels, okay? But the key thing is you can now see that are we starting to have another trend, impulse, correction, continuation, first wave, second wave, we made a high slightly higher than that, all right? So getting ready in the new week, what are the best possible scenario that we can see? This is an area of high. We have confirmed that the sellers are losing steam. They came in again, they sell. They came in again, they sell. And I'll show you more tricks to it. This level of equilibrium, all right? This level of equilibrium, this level of breakout, can be one of the best level to watch for on this 4-hour chart. It provides a low risk. It's a demand zone, right? If we look at a couple of other things, we might see some more intricacies over there as well. Look at it over there. That's where we are breaking out from. Boom to the high. We come back there again. Boom to the high. So you know for a fact that, okay, how many pips? From here to here, 23 pips, low risk, 44 pips, and I will personally extend it to the high of this candle now. Okay, such that my first entry at least, as soon as price is touching this high, you can see what we have over here as well. That is this a 4-hour channel? Yeah, that 4-hour channel, right? And then we are breaking down into support zone. There's something that says that this resistance shouldn't act and break us down back to this level. And that level at the same time as well is the psychological level of 1900 zone. All right. So be of buying in that location can be of significant um, help going forward. All right. So if I turn on my moving average, okay, the key thing about this now is this is a level of oversold 633 sell off, level of oversold 633 sell off, level of oversold sell off. Now we on the 4-hour chart, we are now turning our 200 moving average to area where the buyers are coming in. That's what we want to see. We want to see the buyers coming in. And then if you want another session after this, kindly signify your interest. I can do one last session. If not, I can call it a day. And the 200 has now started to act as an area where they are considering buying. Not only that, an impulsive move comes significantly above it, and then we saw the correction back to 200. Now we move up higher. Our 36 EMA is now our resistance. Sorry, an area of no problems. It's now an area of retracement level for price, right? Such that if price comes back down to that 36 EMA, it's coming to the channel low, is coming to 36 EMA, and it's coming to an area of support, right? And that is key for us to look for a next opportunity, and most probably that opportunity will be that key opportunity for things to go up higher. But what I wanted to say to you in essence is this: the reason why